A big week for stocks. All three of the major indices hitting the highest level since the beginning of December. Also, the Dow locking in its sixth straight week of gains as the Fed holds steady and earnings roll in. And it is the final countdown to another big week of earnings that could tip the market in one direction or another. General Motors, Twitter, Alphabet, Disney, all on deck. GM and Twitter, the two standouts of the group this year. So we thought it would be a perfect time to play a little Trade It or Fade It right off the top. It's a Friday show. So, Guy, we're going to start off with you.
Europe for you?
You know how
this week it's been
Europe.
Yeah. I mean,
it's been horrible music week on Fast Money. Yes.
Oh, come on. I mean, this is a Geico commercial.
Oh, because we had Survivor, Eye of the Tiger,
which is the top three worst songs of all time. But we're going to play Trade It or Fade It. It's a Friday show.
Alphabet, the stock's up 7% this year. Trade It or Fade It.
Stock's up 7%. It's up 12% over the last probably couple weeks. And you're going to say, most people would say, trade this sucker. It's a compelling valuations, great company. Swizzle here is saying, ready? Fade it. Put up that graphic right there. See, fade it. And why would you say that, Guy?
Why, Guy?
Well, the last two quarters, the stock has traded down 5%. They've only really beat EPS estimates 11 out of the last 20 quarters. Pretty much the same thing with the revenue. I think they're setting up for a disappointment. I'm in the fade camp.
I'm definitely a trade it. Look, valuation to me is very compelling. Multiple businesses that are undervalued, including YouTube, which they're starting to really begin to monetize. I think the regulatory headwind has been well flagged. And I think Google management, of all the big tech management teams that actually have this kind of exposure, seems to me the most balanced in terms of how they're preparing it. And I think whether perception is reality, investors don't think that these guys have a business model that is flawed, and I think that's really what it comes down to.
You mean like a Facebook problem?
I'm not going to say it.
I don't think privacy concerns. I don't think privacy concerns are done yet, right? I mean, there's still a headwind for.
So it may have a little bit of a Facebook problem.
I think it has a Facebook problem, much less than Facebook's problem.
Right.
But technically, it's challenged. Right now, it's running into tremendous headwinds. I do think you're going to see the stock roll over.
Right.
I think costs are going up too.
You like tech,
you have YouTube content costs are going up, and they usually go up at the tail end of the year. The strong dollar has been a headwind, and it's strengthening through the quarter.
I do still like tech. You know, typically, and I think about things from a more macro perspective, right? So when we think about sector rotation, we think about it from a business cycle perspective. So if we're right and the economy actually is slowing down, it's going to continue to grow, but at a slowing pace. Typically, tech does well. Investors look for companies that can grow,
increase productivity,
when growth is slowing, increase productivity. So we still think the sector as a whole can do well.
All right, let's move along. General Motors, it is up 16% this year. Traded or faded, Tim?
I'm definitely trading this one. I'm the most excited about these names. Look, the fact that this company continues to generate $4 billion in free cash flow.
Wait. We have to issue a correction. Okay, there we go.
Thank you. Whoa.
Go ahead.
Whoa.
We're looking out for you.
Ultimately, this is a company, despite all of the negative chatter about the price action of the company, they've actually continued to perform. They gave us updated numbers. 2019 at $6.70 a share. This is 5.7 times earnings for a company that's invested massively in autonomous. It's very well run. Mary Barra is my candidate to run for president, as far as I'm concerned. I love this company.
Yeah, this is one where I would fade it on this one. 24% up since December, basically. Had a large move right out of their shareholder investor meeting. I think a lot of this is already in the stock. And all the good news that Tim said, the stock never holds the good price. It always rolls over, regardless of the positive headlines in the name.
How's the stock market done over the last, let's say, I don't know, 8 years, Mel?
8 years.
I don't like where you're going with this.
Done pretty well. Jeff's answered my question.
GM, so you're going to say GM has underperformed?
Underperformed? I mean, where's the stock close? 38.5? You know where it was in this time, 2010? I don't know.
So you're playing the stock market in the last 8 years?
Stock market's done extraordinarily well. Auto sales have been historic auto sales, and GM can't get out of its own way. So who's to say that it's going to do that now? So I'm inclined to be in the Steve Grasso camp of faded.
Well, if you think about it from a sector perspective, too, and this isn't GM specific, but it's autos, it's discretionary, you've seen this massive rotation into names and sectors that didn't do so well last year. So the presumption is that's going to continue going forward. My guess, again, if the economy continues to slow, what you're going to see is a rotation out of those sectors, back into tech, back into healthcare, even utilities. If things start to really slow, that's what usually does well in a slowing expansion phase of the economy.
Wow, so you're really going kind of defensive overall.
It's a little bit of a barbell approach, I would say. You know, tech a little bit less defensive, but then the other sectors maybe more so. And it might be a little bit unusual to think about that, but that's how it tends to play out. You be careful though, because when it does eventually turn, tech gets hit hard.
All right, Disney up 2% this year. Traded or faded, Grasso?
I'm going to say fade this one as well. It's so far across the board faded. This one technically is challenged as well. And no one's complaining about the revenues. No one's complaining about their streaming, ESPN, their Disney. They're going to be successful. The problem is the stock is running into headwinds as well, and it's run considerably into this spot when they report.
Yeah, it's the same thing. You know, Bob Iger, I think he makes, what, $60-something million a year? I mean, that's not a bad job if you can get it, because the stock is basically traded.
That's him. That's him. He's correcting the number he makes.
We do it at 5 o'clock every day, Guy, at television.
It is, Bob. I'm sorry. I mean, I'm going to have to.
That.
I don't
I'm
even
not the only one.
Total
Turn
party
it off,
foul.
man. Wow.
Anyway,
Turn
as
that off.
you're saying, okay.
Faded. I mean, I don't know why he has to call now. He knows we do a TV show, and I apologize for insulting you. But the stock is 111 now. It was 111 3 years ago. I think, to Steve's point, it runs into trouble here. I'm going to fade it.
So you guys are talking about sectors. I'm going to trade this one, and relative to its peer group, this guy continues to outperform. Disney is the most diversified media company. Media companies were knocked down aggressively 15 months ago. The entire sector multiple compressed. I actually think people are understanding the dynamic of both the control of content. Disney has articulated and seems to be executing on a over-the-top content and delivery system that's working. ESPN has solved their problems for the most part. I don't know why you would pick at least any other name in the sector. Frankly, Disney continues to perform in a bad environment. Disney.
By the way, that was such a Tim move.
I know. You know what's funny is every night before the show,
you know what?
Tim.
You know
I say,
what?
Tim, shut your phone off. And I didn't say it tonight.
I've been a really good boy for a couple weeks. Why is Guy's miscue becoming a look at Tim and what he does wrong?
No, it's fair. It's a fair point.
All right, let's move on. S&P 500, Jeff, traded or faded here?
So obviously it always depends on your time horizon. I think if you're going to be in the market for the whole year, you should probably trade it. I don't think it's going to be a straight line higher. I think over the next month you might see a little bit of a give back. You have 85% of names right now trading above their 50-day moving average, so maybe a little bit overbought. The V bottom that we've seen, not the norm. So if we give a little bit back, I think that makes some sense. Once the market starts to turn its attention to earnings, we do believe earnings are going to be able to grow. With the Fed now out of the way, you can probably maintain the multiple expansion we've seen so far at the very least. And then interestingly, January, when you have strong Januaries, you usually have strong full years, right? 2018, the big exception there. The big difference is in that 2018, via the Conference Board survey, 51% of investors expected higher stocks a year later. That 51% is the highest reading we've seen in over a decade by a long shot. Today, only 31%. So I think some of that exuberance has come out of the market, and I think that's a good setup for the year.
Mel, you know, we like to do, you and I, every once in a while, we text each other. What do we do? Haikus. We text in haiku.
575.
You know what a great haiku word is? And it's a hard equivocation. Equivocation.
Yeah, that's good.
And there was some equivocation going on here. Am I right? Am I right? I would say, yeah, long term probably goes higher. Short term, I think you faded here at 27.10. Yeah. I think Mr. Grasso would be in the same camp. Fade that sucker.
So we're at the higher end of the sell range in the S&P. It's 27.15. Guy just talked about it. That's where you want to sell it. The last gasp in this rally is going to be the China trade deal. Once that gets done, it's the only that's holding this market up right now. Once it gets done,
hope of a deal.
Look,
the hope of a deal. When the deal gets done, the market should start to collapse. So I would fade it.
Look, everybody's been expecting this market to sell off. The pain trade is higher. The reality is that earnings have proven that the U.S. economy is continuing to deliver for a lot of these companies. I don't change suddenly and say, hey, it's full steam ahead. But I can tell you right now, there's a lot of money that continues to want to take this thing higher. So I think the pain trade is, I get that. And we said that 200 points ago on the S&P. So, I mean, I think if you look at the multiples, if you look at the earnings that have come through, the fact if you're talking about a China deal, if between that and the Fed out of the way, these are the two things.
Fed's not out of the way, though. You guys both said that. The Fed's not out of the way. The Fed might raise rates. They're not out of the way. They're not cutting rates. That would be out of the way. QT is still coming off to the tune of $400 billion per year. That's not out of the way.
How come Tim didn't get a traded little banner when he traded the S&P? It didn't go ding.
I'm not. I don't have any buttons in front of me. I'm not in charge of these
I made it happen right there.
On top of your game. Other than the phone, right on top.
I don't know. It's never happened before. It's the craziest thing.
Please.